What's up guys, Kevin Cage here with another crypto update. Let's kick it off. First up, we'll talk about some recent news along with the Bitcoin price chart, this current bear market, the future Bitcoin halving, and just expectations of the crypto market recovering in the future. But one thing I want to emphasize is just the importance of using a bear market to get your average entry down, and that's why I take it so seriously. For a clean example, using Cardano on the ADA price chart. So we know ADA last cycle did not break into a new all-time high price for over 1,000 days, and during this bear market it crashed approximately 98% from its all-time high price. In looking at ADA, it fell below 3 cents, it fell below 2 cents, and it was really in this range for over 500 days, giving a great opportunity to try to accumulate and bring your average down if your average buy-in was at 10 cents or 15 cents. Now at the end of the day, profit is profit. Is it really going to matter if you bought or had an average entry price at 5 cents rather than 15 cents and it goes to $1 plus or it goes to $3? Maybe not, but it really does make a difference in terms of the profits and the ROI potential overall, because exponential growth is a big deal. So let's say a retail investor was dollar cost averaging during the last multi-year bear market to bring their average entry price as low as possible before the next impulse, retracement, or even bull run into a new all-time high price. The difference between a 5-cent average entry versus a 15-cent average entry might not seem like much, but that is a 3x difference and also a 3x difference in potential profits. That could be the difference between a 20x or a 60x, or even more conservatively, a 2x versus a 6x. But bottom line, and right or wrong, the goal of investing is to turn a profit and buy as low as possible to sell as high as possible. A 3x difference between your average entry price is a 3x difference in potential profits. Now, if your average was at 7 cents instead of 5 cents, that's still a 40% difference, and it might not seem like much, but during a bull run, and if prices do reach very high levels in the future for different projects, 40% is a big difference later on as that actually grows. So when I'm looking at charts, I do my best to keep that in mind, and I'm not trying to FOMO into anything when it's already done a 3 to 5x or even started its big impulse. Could it go higher? Could it do another 5 or 10x? Absolutely. But I personally like to focus more on a laggard that hasn't done that 3 to 5x already. And of course, it can go higher if it is a big bull run and alts just rocket to an all-time high price, but I don't bet on that. And the better my average entry price becomes in a specific project, the pickier I can be with my remaining capital. I don't have to FOMO into every single opportunity. I can keep 10 to 20% in liquid cash just to capitalize on if there are any black swans or liquidation events. And even during a bull run, there are 30 or even 50% crashes on the way up, so there will be pullbacks regardless. And just remember, last bear market, Cardano took over 1,000 days or over 1,100 days to break into a new all-time high price. People were calling it a scam down here. And of course, it goes up, it goes down. Crypto is volatile. This is not enterprise adoption or utility at scale. Yes, there are some enterprises using these applications, but they're not using it widespread throughout their organizations. They're not using it for their entire system yet. So that's my thesis. I believe the crypto asset class explodes in the future, but the question is which assets do, which ones survive, and which ones perform best, which is why I'm here. And you don't have to be a genius to make a killing in crypto during a bull run when a variety of assets explode, but the best case is when different assets actually take off at different points. Now, if all of the assets in your portfolio and the altcoins recover at the same time, it might be nice to see your portfolio value increasing psychologically, but that's actually not the most profitable scenario if you're swing trading or trying to compound between them, with even just a portion of your overall capital for a trading bag. So we have the Ethereum price chart on the daily time frame, these blue candles, and we overlaid two other alts, XRP and HBAR. And you can go back to previous cycles, but even in 2021, we can see that HBAR, this blue line, actually took off before a variety of others. So we can see HBAR drawing this impulse about 240% or a 3.4x. So HBAR topped here and XRP actually didn't get moving until all the way down here, and that's approximately 19 days. So whether 2 to 3 weeks between different assets popping multiple 100%, that's the big opportunity. So yes, a lot of the time alts are correlated together and they run together, but during a bull run you can still find multiple week periods where there are laggards and leaders. And the difference between this first top for HBAR versus Ethereum was about 60 days, so you're talking about a 2-month difference for opportunity. So Ethereum did here over a 900% increase over a 10x. If you're even just able, instead of getting a 10x or even a 2x, 2 consecutive 40% returns in a row doubles your position. So that's the big opportunity, is having multiple holdings, not 20 plus, but maybe just a few major holdings that you can track. I personally do 3 to 5. And during a bull run or a sizable retracement, I'm hoping that some actually are uncorrelated. So some go up, others go down, and I have that opportunity to improve positions in different projects. In looking at the Bitcoin price chart, the last time we were even up to 35,000 where there's the 3-2 Fibonacci retracement, there's an open CME gap and an open weekly fair value gap. There's also higher open weekly fair value gaps as high as 60,000 for Bitcoin. But bottom line, it has been over 500 days since we've been in this range. Yes, we got a nice retracement from Bitcoin's low or its cycle low thus far. And the question everybody's asking themselves is, what type of cycle are we going to see? What type of bear market are we going to see? Is it going to be a mix between the previous bear market in 2015, or is it going to be similar to 2019-2020? So here's Bitcoin today compared to the previous cycle of 2013 to 2017, where it did the super cycle bull run. We have two moving averages on this chart just to provide a big picture view. Look at golden crosses, look at the trending once the price is actually above these moving averages. So the yellow is the 50 and the blue is the 100. So years ago, we had multiple lows. We tested this 50 week just like we did here, rejected it, and finally got the power back above it. Once we started closing above the 236, back testing it for support, we had a golden cross between these moving averages, and we actually retraced all the way up to the 618 Fibonacci retracement. And you'll notice that Bitcoin got its retracement to the 618 before the Bitcoin halving. And here's today versus last cycle's bear market from 2018 all the way up until 2021 when we started taking off. You can see we got the retracement to the 618 just like last cycle, which was also before the halving. And we also had this golden cross. However, we retraced March 2020 crash and did a V-shaped recovery going into the Bitcoin halving in May of 2020. So a lot of bearish people think this entire move is going to lead to one more big crash before the recovery, just like back here. And the bullish people are looking for Bitcoin to keep the strength up, maybe backtest the 11.8, sweep the low 20Ks where there's an open CME gap and an open weekly Bittrex gap. But I want to get this show on the road, and this is what I'm leaning towards for that bullish scenario of actual recovery. So the Bitcoin halving is in April. The last two cycles did in fact retrace to the 618 before the halving. So I found that interesting, and it doesn't mean it's going to happen, but keep in mind the 618 for Bitcoin today using the cycle low is 48,000. So the whole point of this video is just to conceptualize these ideas, and conceptualization is easy, but application is the hard part. Actually applying it during a bull run is the real challenge, but the opportunity is still there. When DAG took off in 2021 alone, it did over a 70x return. And on the way up, there were crashes. Here we can see 28-29% drop. Here wick to wick over 70%. Here another 70%, before recovering over 300% or over 4x. So there is definitely a lot of volatility during bull runs. And no matter where we're at in the market, whether it's a multi-year bear market and trending sideways and down for hundreds of days like today, I always have a plan and I'm ready to execute when that opportunity presents itself. So whether you're just a long-term holder and you have long-term targets and a simple take profit, you set and forget in DCA, which is the most simple and it can often be the most profitable, make sure that you have levels in mind, you have a plan, because during a bull run, once we see green candles, our price targets typically change, and it's so important to at least have a take profit level where you can get your initial investment out, even if that's after a 5x return. And by doing that, the rest of your money is house money. It can grow, it can drop, but you at least have and recovered your initial investment. Be careful of any community where they say you have to be all in on this asset. Yes, I have heavy positions in a few assets, but I'm never all in. Crypto is volatile, it is still highly unregulated, and it's maturing. There is massive potential, but there's also high levels of risk, and we have to remember that. Do not forget, by getting sucked into the positive news or strong fundamentals of a project, that anything can go to zero. So we'll finish up with some news. So I believe tomorrow is the proper party for the company Ripple, so I'm hoping that there's some type of positive developments or big news from this. We also got some news from NBG. This is the National Bank of Georgia, and they're planning to select a single technology partner for the Digital Gel or GEL project pilot. So they're moving ahead with a CBDC project and will introduce a limited access live pilot environment to test the CBDC system technology capabilities and potential applications. They've shortlisted 9 companies that have demonstrated sufficient technology potential, maturity, capacity, relevant experience, and desire to join our on-field exploration. And we can see Ripple Labs number 8 is one of these companies, which is pretty interesting. And just keep in mind, with MasterCard specifically and their CBDC ecosystem for 2023, a variety of countries, including Brazil, one of the BRICS nations, we can scroll down and we know that Ripple has actually joined this group. So Ripple, Fireblocks with MasterCard Consensus and a few other organizations are part of the CBDC partner program, and they have a huge reach. Whether we like it or not, payments are becoming digital more by the day, and Web3 infrastructure is super important. Also got news from Reuters. JP Morgan's UK bank Chase is to ban crypto transactions. So funny that this happens during a bear market. The same group that called Bitcoin a scam repeatedly, and then their funded company Circle purchased the crypto exchange Poloniex for $400 million years ago. So they're saying crypto's a scam, yet they're investing into a variety of crypto companies and opening a crypto trading desk. Things that make you go, For Hedera, shared by this group, we can see 7 out of the last 15 days have seen over 100,000 accounts created on Hedera's testnet. We have Kraken progressing in terms of European expansion. They secure an EU e-money license and a VASP in Spain, a VASP. So Kraken the exchange received authorization from the Central Bank of Ireland as an e-money institution. In addition, they have successfully registered with the Bank of Spain as a VASP, or a virtual asset service provider. We're going to see this term VASP more and more over the coming years. And here's some great information from the X Frontier. So we know the Casper Labs CEO has stated time and time again in a variety of podcasts that are available to listen to, they're on a mission to build the Red Hat of blockchain. Red Hat was an early company using Linux, the operating software. It was misunderstood, and they found a way to commercialize and make a business out of Linux as an operating system. It was doubted, just like cloud computing and other technological shifts, just like always in the early 2000s. But IBM saw the potential and they acquired Red Hat for $34 billion. And there will be a business or multiple businesses in the crypto asset class that are valued at these types of valuations. For example, companies like Ripple and Coinbase are both valued well over $10 billion. Ripple's valuation is that without even using XRP, they have that as zero on their books. And not financial advice, and this is 100% my opinion, I believe that Casper Labs has that shot. And X Frontier says, wouldn't surprise me if IBM did the same thing with Casper, and here's why. Casper Labs already joined the IBM Global Program, providing partners access to Casper Network. IBM has one of the biggest Rolodexes. They are connected to the world's biggest organizations. Casper and IBM already did a demo showing an interoperable bridge between these networks, making Casper's network the first bridge to a public chain by IBM. We know Casper Labs joins Hyperledger Foundation not just as a member, but as a tech partner. That is often overlooked. And according to Casper Labs CEO, well over 90, maybe 95% of these deployments are actually hybrid. What does that mean? It means that these applications by enterprises and Fortune 500s will be connecting and using the public Casper network, which means computation to the public Casper network, which needs the Casper token. And they're working on multiple hybrid network implementations with Hyperledger. Hyperledger Fabric is just one single framework. I mean, this is used at full production by Walmart, but a lot of these organizations are going to be using hybrid deployments instead of just solely permissioned and private applications. And Hyperledger Fabric was actually created by the Linux Foundation in 2015. IBM is a founding member. The CEO of IPWE, also a member of Hyperledger Foundation, a huge patent repository, stated they chose Casper over Hyperledger Fabric directly and other L1s to build their solutions. So they didn't choose Hyperledger frameworks like Fabric. They didn't choose other L1s like Ethereum, Hedera, Cardano. They chose Casper because of its modular and upgradable architecture by design. And IBM, the company, has endorsed Casper and spoken alongside them at stage many times. So Red Hat was that big acquisition, and that was the company that helped make Linux mainstream. And today, over 3 billion Android users are using Linux as an operating system. And similar to Red Hat, Casper Labs, the company, is focused on providing core open source solutions to enterprises as well for DLT. They understand blockchain 4, they're not thinking about blockchain 3, blockchain 2, or just Bitcoin for enterprise application. It's an awesome post by the X Frontier, and this is something I consider long term. And remember, we have iTrustCapital linked in the top of this YouTube video description and also linked in the pinned comment. If you use that link to fund a free account, you get a $100 funding reward in USD. Some people may not have any type of retirement account or it's not for them, but for me it was a big fit because I already had Roth IRAs, I had one in the S&P 500, and I got one into crypto back in 2018. I personally love having a Roth IRA specifically in the crypto market because I want long-term exposure and I'm bullish on the coming decades. I've been with iTrustCapital for over 3 years now for tax-free trading and tax-free investing, so 0% in capital gains leveraging a Roth IRA. I have family and friends that have accounts. Some have started just a small new Roth IRA for crypto exposure, and others have rolled their 401k from their previous employer into crypto just to have some exposure with that instead of just sitting in the stock market. And everybody has different goals. Some people are very scared of the crypto market, rightfully so, and other people want to take the chance and they see the growth of tokenization in this asset class. If you want to learn more, check the link in the video description. I have a playlist on my YouTube channel titled iTrustCapital if you want to learn more. I hope you guys enjoyed, and a massive thank you to all that hit the like button, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.